Hey, welcome back. We are here with another episode of Pure Perspectives. I'm Gary Pierce in Texas, and I've got Clark Alexander out in California. Clark, how's it going?
Good. How are things in Texas?
Good, good. We had a little bit of a cold snap this week, and so kind of bundled up this morning, but all
Same here.
good. Did
Very
y'all
cold.
make it through Thanksgiving? Take it.
Yep. Everybody survived. We're back. Kids are
All
back in
right.
school, so everything's good for
I
now
think I
till
need
Christmas.
a 2 week fast, and I'll be
Yeah.
back to
Yeah.
my
Just a
normal
water
fighting
fast
weight.
for
Yeah, yeah. It was way too much turkey
way
and
too many calories.
yeah, too many sweets. So, anyways, enough about eating and overeating. Let's talk about consumers and what they should expect in the loan process, right?
Okay.
So, I want to like when you kind of walk through what is going to kind of happen next, or when should I start the process? Let's take a purchase scenario. Let's start from there. You get somebody that calls you and they say, "Hey, what I want to buy a house. What do I need to do?" And I'll let you take it from there.
Yeah. So, we get a question that's like, when should I start? What's the process for starting, right?
Hmm.
Obviously, our response is going to be the sooner the better, right? The sooner that
Right.
we can get a read on the scenario that we're working with to give you
Hmm.
to obtain a loan for your purchase, the better.
Hmm.
So we're going to start with an application. It's an online application, secure application that we have.
Yep.
You're going to provide information that's required for us to go get the pre-approval. That's going to be income. It's going to be liabilities. It's going to be credit. And we're going to take all that information
Hmm.
and we're going to run that through automated underwriting. And you'll hear that term,
Hmm.
like, what does it mean? Well, automated underwriting is basically the tool that takes a look at the loan scenario based on the information you provided us
Hmm.
and spits out an answer. Are there blockers to this loan? Yes or no? And
Yeah.
if there aren't any blockers, these are the Fannie and Freddie kind of conditions that we're going to
Hmm.
have to work with in order to obtain the loan. So
Yep.
think of it as kind of the initial kind of review of everything, and the
Yep.
initial, our goal is to get approval there. Then we can at least get the ball rolling and head towards the actual purchase of the
Yep.
property.
Got it. So, do you suggest that people shop prior to obtaining the pre-approval, or
I would
is it?
say if you have a price range in mind, I would say get started at that point. Let's build
Hmm.
the loan on the ideal scenario that you want to go out. We can adjust based on the information that we gather
Yeah.
and what the automated underwriting spits out to us, but get started soon. If you know a
Yeah.
price range and you know
Yeah.
whereabouts you're going to buy the home
Got
and you
it.
have, deposit and what have you, we're ready. It's a good time to get started.
Yeah, and it kind of gives you your buying power too, right? You know what you can kind of get an idea based on the what your income is, to build out your debt to income, right? And so now hey, based on current daily rates,
Yep.
this is your payment. Are you
Yep.
comfortable with 2,500, 3,500, whatever the number is? Okay, good deal. So they get, you work them through that piece. I know what my buying power is. I know what my purchase ability is. I go shopping, make some offers. I get a
Yep.
contract.
Yep.
Now once I get the contract in, what happens?
Now we're going to build the loan, right?
Okay.
We know the exact property. We're going to get in with, we'll probably take another look at rates, right? We're a broker.
Hmm.
We're going to look across lenders. What has changed from the time that we did the pre-approval to find the best opportunity to get you the best deal? We'll do that. We'll build the loan, and then we will submit that to underwriting. And I
Okay.
would say, Gary, this is probably the area that we get the most questions on is like,
Uh-huh.
wait, I thought you said that we went through this automated underwriting. Like, why are we
Yeah.
going through underwriting
Right.
again? And I would say, yes, one is an automated way for us to get to
Hmm.
that point where we're comfortable saying, yes, you have this
Yeah.
buying power, go and secure. Now we're talking about a specific transaction. We've got the property.
Yep.
Now there's a person involved in the underwriting department, and they are
Yep.
going, it's the fine tooth comb stage of the process, right?
Sure.
They're going to do verification of employment. They're going to make
Hmm.
sure all the numbers are real. It is basically the lender saying, we're
Hmm.
doing our homework to make sure that this loan is suitable to write.
Right.
So I think people get confused as to the automated piece and the kind of the true
Yeah.
underwriting of the loan.
Yeah, it's a good framework basically to start with, and gives us a good, from a lending perspective, an idea where a client is financially and if they can afford kind of the product that they're looking
Yep.
at. So,
Yep.
so
Exactly.
we get the loan submitted. What else is it, as far as when do we do appraisals and that sort of
Yeah, so we
stuff?
will start that process as soon as we build the loan. As soon as
Hmm.
we submit the loan, the processor on our side is going to get involved. We're going to order appraisal. They're going to be the processor is going to work with the
Yeah.
underwriter to deal with
Hmm.
any conditions. Right? There's going to
Okay.
be some back and forth of,
Yeah.
hey, we need updated docs on this, or we need
Sure.
clarification on this liability. There's going to be some back and forth. And I think that's the point people feel the most angst because it all
Mm-hmm.
feels like, hey, maybe they're asking questions because I'm not going to get this loan. No,
Yeah.
they're just doing their due diligence. So it
Yeah.
really isn't anything to get too concerned about. We just got to get them what they need.
Yeah. And then at that point, assuming the underwriter says, hey, you know what, Clark, this loan looks great, we get the conditional approval at that point.
Yep.
Is there what happens after conditionally approved?
Yeah, so conditional approval is going to be basically looking at the income and liabilities to make sure that it's going to work for this loan, right? Our
Mm-hmm.
goal is ultimately to get to the point where we are comfortable sending out initial disclosures, right?
Mm-hmm.
So the initial disclosures are going to be the closest thing to a final snapshot you're going to see for the total loan details, right? All the breakdown.
The
Could there
initial
be some small changes in numbers?
the
Yeah.
the closing disclosure, right?
The
The
closing
initial.
disclosure. Right. Initial closing disclosure is going to tell you like, hey, these are the numbers. This is where we're at. Our goal is always to find areas where we can cut cost. That will be reflected at this point.
Mm-hmm.
And the goal is to get this, you have to have this 3 days prior to closing. So we would
Yep.
work on that at that point.
Yep. Absolutely. And then the three best words in
The
real
three
estate.
best words: clear to close.
Right on.
If you wonder why we get a little excited announcing this, because I don't think consumers are like, great, we're clear to close. We expected that to happen. Well, yeah, there's a lot of work on our end that goes into obtaining that status. So we get
Yeah.
kind of
Yeah.
excited when we get clear to close. Like finally,
Yeah.
we can get a close date
Yeah.
locked down. We can get the transaction closed.
Awesome. Awesome. So then at that point, after clear to close, what else is left? Do you just basically sign, or like how does that
Yeah,
happen?
we basically, we work with title and get everything lined up to
Mm-hmm.
close the loan. So actually
Okay.
physically signing the documents,
Okay.
submitting your payment and cash, and all the settlement goes through to actually obtain the property and hand you the keys.
Awesome. Yeah. It's a crazy experience, and we try to do as much as we can to not bring in, because this is a stressful experience for consumers, right? You do it once every 5 to 7 years. We're doing a lot of these throughout the month, so we know where the pitfalls are. We're not going to call you and on every specific moment to we're going to work with the underwriters to kind of guard you and make it a smooth experience so that you're not worrying about it and that you are getting to the closing table in a timely manner. So I think
I would say the other thing, Gary, just from you mentioned a good point, is we're also keeping the realtors involved. Right? We're talking a purchase, so there's typically
yeah.
realtors involved on the buy and sell side. So we're keeping them
Yeah.
informed too as well. So
Yeah.
our view of it is that we don't want anybody in the deal being surprised. So we're
Yeah.
going to keep everybody updated. We pride ourselves on active communication, not to spark fear, but to say, hey, peace of mind, this is what's happening. Everybody involved in the deal is up to speed.
Yeah. It's always, communication is always better, whether it's, good or bad. You need to communicate and then have a plan of action to ultimately get the clients to the closing table.
Yeah, and we'll put a link to, we have a roadmap doc that we've produced that just walks through this. We'll put that in, a link to that as well, so you can see it.
Awesome. Well, hey man, I appreciate it. Great breakdown. If you have any questions out there, make sure you hit the subscribe button, drop a comment below. Happy to go through any of this process with you, work on your mortgage plan. It's the end of 2025 here in December, and 26 is around the corner. So if you are thinking about a mortgage refinance, purchase in the future, let's work on that mortgage plan and get you in a good place to be ready to go and take advantage of the opportunities.
Amen.
All right. Y'all have a great week. Thanks.
Thanks, everybody. Take care.